Welcome to the report, and here we're looking at the S&P 500. It's on a daily chart, but as you can see, it's covering a few years here. And I just wanted to sort of explore the bigger picture because there's not a lot sort of happening overnight, except in the euro. There's some exciting things there. Look, this particular pattern that we're looking at here could easily be a corrective pattern in terms of this move through here as an A wave, a B wave, and a C wave down to here. This is, and then we'd be looking for 5 waves to the upside through here. So we'd be looking at a 5-wave structure like that. That's pretty much how it sort of pans out, and that's where we are sort of at the moment, really. So in this section here, in this larger impulse wave, that obviously there'll be 5 waves in here, there'll be 5 waves in the 3rd wave, and there'll be 5 waves in the 5th wave. So you can see that there's still a lot of potential to the upside there. And this is not set in stone. This is just exploring the possibilities. We can see that in this first section here that we have 5 waves in here. So we've got the pretty much like this one here for the 1 and the 2 and the 3 to here and the 4 to here, so to speak, and the 5 up there. There's a nice 5 waves in last one here. So then we're looking at this 5-wave structure up through here. There's a couple of little things here in that there's a couple of ways to count this, and if anybody's got any other ideas to put into the pot, that would be good. But as so far, this is a up for wave 1 here and back for wave 2 here, or this can be the whole first wave up through here. And then this would be like wave 1 here, wave 2 here, and then this would be the next degree smaller through here, which we're working with here. So that would be something of this nature here, where we've got the 1, the 2, the 3rd wave still unfolding into here, into the 1650, which would be the medium level. We'll get some sort of corrective process there, and then up to the 18 there. So that's pretty much sort of how we're sort of look at one way to look at this, if the market continues to the upside. So the only dilemma with the count so far is how we tackle this situation through here. So if you've got an eye for Elliott and you've got any ideas, well then please send them through. It's a little bit difficult to count this here up as wave 1 to here, so to speak, because it just doesn't sort of pan out properly. We can see that there's a 5-wave structure from here in terms of the 1, the 2, the 3, the 4, and the 5 up through to here, but it still leaves this one here. So this needs to be counted as a wave 1 and wave 2 through to here. So anyway, if you've got an Elliott eye, then let's start exploring some ideas. But this particular count that we're looking at here is quite viable, mainly from the point, well, another point too is from the major trading level 1 here, then the next major trading level up would be 2 as well. And this is also very much in line with the banks. I don't know if you recall, a couple of weeks ago we were looking at the longer term picture with banks and their possible upside potential as well, and that really fits in quite nicely with this as well, and this would also fit the potential for the US banks as well. Okay, that said and done, just looking at the US 30 here on the 2-hour chart. As you know, we've been looking for this to move up. The S&P 500 has moved up through its level, so I would expect this one to do the same in due course. So I'm still leaving the wave 4 there, but as many of you know, the wave 4s can get a bit messy, and so far this is really quite a simple one through here. The other side of this too is that, the 15,000 here hasn't really had a good sort of, going over as such as a retest and so forth. So it is possible for this to move down back into the wave 4 of 1 lesser degree through to here for that as well. So we just need to be a little bit mindful of that. But look, In terms of trading, it's quite simple. Support on the 15,100 would allow you to scale in through subgroup 1 and then be looking for 15.2 up through here. You'll see that the S&P 500 has moved up a little bit higher through its level. So its levels are 1630 through here, and yesterday we were looking at this being a little wave 4 in here and then moving further to the upside and making new highs here. So just being above the 1630 or retesting 1633 certainly helps that scenario to the upside. This is corrective, so a new high here will be made. That has occurred, but the wave count here still appears that it can have further to go, so we'll be looking at the 1640, but we also know the 1650 is a medium level, bit of an odd number, but it will certainly hold the market for some time there. It's pretty much the same with the European markets as well. When we're looking at the DAX here, if we can see that this is in 3 waves here, a little bit dodgy, but you know, it's there. So support on 83 would be really important. Support on 83 here would get us up higher towards the 85 area up through here. So once support has developed, or if support develops on 83, then you scale in through group 1 and you'll be looking for 8,330 to be the support there to get up there. The same with the UK market as well. It's got its support on the 6,600 here, and the same sort of wave structure there, so it's really just following the S&P 500, so we can be moving that higher as well. The 6,650 will definitely be some resistance there, so if you're day trading up, take the money at 650 and then wait for support there. The Australian market, yesterday we were looking for a break above the 52 up to the 52.30, which is the top of group 1. That's where you exit, you wait for support. Support never came, so it really completed the wave structure. But once again, this little pattern here is quite similar to the Dow Jones and the other markets, all the other indices basically. So we'll see if this is going to push up through here. Look, I guess if you can get support on the 52.20, you could take the trade. You could probably do it from the 52.10, but look, any drop under the 52 here would have to exit that because at this stage here, this is in 3 waves here, an A, a B, and a C wave here. Okay, so that is a corrective ABC correction. That said and done, that high should be taken out. Also, if it is a wave 4 correction here, then it can just get bigger and uglier. So this A, B, C here for the A wave may just be that, may just be the A wave. So we may be seeing a B wave and a C wave through here as well, a larger correction. So look, taking out that high there and finding support on that 52.20 there would be a safer bet to the upside for this. You know, you're probably better off, you know, shorting the Australian dollar or even more so the euro. Let's have a look at commodities. But before we do this, I just want to have a look at the Chinese markets. Okay, this is the Shenzhen here. We normally look at the Shanghai, but we also look at this one as well. And essentially through here, we've been looking at this in a corrective pattern down through to here. We know that the market's come back up to the 1,000 point here, and we've been observing it through here because it was just easier to work with it being at this large number through here, and we knew that it would have its arrival, it would have its reaction and find support and then create the first high above the level. Now that's all going quite well, so we could look at this as developing a 5-wave structure to the upside through here. Okay, so that's what we'd be sort of looking through there. Once that occurred, then we'd be looking for a larger correction, but it should push higher through here. So the thing is that the Shanghai market hasn't pushed up as high as its previous high here. So this is leading the market, and we need to acknowledge that. So when we look at the Shanghai Comp, we can see that you know, it's if I just squash this up a little bit, it'll just see this one here is still way down here where the Shanghai is making the Shenzhen is making new highs up here. So there's definitely a lag in this here. Look, we should expect this to to follow itself up through here. We may see more of a little correction here before we back into 2.2 before we see that that move to the upside. But it's going to be a sort of a helping factor in a way. It's going to be a helping factor in terms of this. This is very much like the copper market, for instance. So if we get this in the copper market, we could be seeing higher ground here as well in the copper market, which obviously is good for the BHPs and the Rios and things. So we're just looking at where the strength is coming from for the resource sector and how we're going to go about doing it. So we're still waiting with the resource sector. Let's have a look at it anyway. Okay, so looking for this little trend to the upside through here, and we know that the Shenzhen has moved up higher. Then when we look at copper, for instance, here we've got this move up through here as well, which is off new lows here. So I am looking at it as an A and a B and a C correction through here, but also need to be mindful that we could have a low in through here. I mean, we were looking at 300, bounce off 300 here. So we need to be a little bit mindful of this. This could sort of pick up steam somewhat. So, while it's above, essentially while it's above the 320 here, which is the pivot within group 1, then it's meaningful and it can be bullish until this is resistance here. So we need to treat this as bullish until this becomes the retested resistance here. So anyway, we'll just sort of bear that in mind somewhat through here. The copper market here, I thought it may have shown nicer impulse wave structure up through here, and it's just been a bit heavy and lagging here. So have some of the other commodities as well, pretty much because of the indices going through their little wave 4 as well. Like the Dow's still sluggish, but the S&P's pushed up a bit higher. So look, if we get a push above here, then we know that this little structure is still impulsive, but it could certainly be a little 5-wave structure here, a little 3-wave structure here, and then a little 5-wave structure here. Not that it matters that much either way. This is just going to be a bigger correction from here in terms of 5 waves up, an A and a B and a C through here, but would only turn bearish now if that 320 became the retested resistance. So, but anyway, we might be able to pick up some more clues from here. But this being above the 330 will keep resources reasonably stable. That said, when we look at BHP in the US, which was down overnight through here, but not down a lot. I haven't checked the volume. It's probably down on lower volume as well. Look, long as it doesn't, if it breaches these tops here, then which we could treat as significant here, then we have overlapping wave structures, and we could really consider this being an A wave. And because what we're trying to work out through here as well, is this going to be impulsive, or is it going to be corrective? That's what we're trying to work out. So, another way to look at it, as long as it stays above the 65, then it's bullish. This is resistance here, would start the next leg of the bear market down. So, so just tying in China and Asia and the base metals market and so forth to see what we've got here. We're not quite clear just yet, but right. Some of the banks were flat, some were up overnight, so there's a bit of a mixture there on that. So the oil market we're still treating it too as corrective, and as oil follows stock, we need to be sort of mindful that that it's in line with the Dow Jones and so forth, and we need to still continue to see this as an A and a B and a C through here. The move up through here that we saw yesterday, the day before, was fine, and now retesting to find support here. So 90, 95 needs to become the support. Any long trade through here would have to take those tops out through there. The simple new high Dow theory, entry would be suffice with a stop under that if that's the case. Right, the gold market. we're still no better off with the gold market as such. The main reason is that yes, we're looking for a resistance of 1500. We're sort of expecting another little high to come up through to here, and that could still be the case. See, the trouble is this move down through here is really in three waves, so we need to treat that as bullish corrective. Yes, that can change on the way down if that's going to be the case. So but at the moment, that long as that low stays in there at 1419, then it's got potential to push up there. But look, even if it made a new low through here, it'd still count as 5 waves on this leg here as an A and a B and a C down through here. So we're still no sort of better off just yet with the gold market. This can be counted in 5 waves down through here, but it doesn't count that well in 5 waves. This counts better as a sort of a 4th wave unfolding through here and a new low coming in through to here, and then that would count better as wave 1 down to here, wave 2 to here, 3 to here, the 4th wave to here, and the 5th wave coming down through to this wave through here. I think one of the things again is that if support is found on 1450, then that would create the long trade. If the in group 1 here, the 10, 20 and 30 here, normally when the 20 becomes the retested resistance, then we'll see further downside at that point there. But even if it did come down through to 1400 here, then we would see a bounce back up through here anyway, and then that would become the important point through here, because a bounce down through here, if this bounced up in 5 waves, then it would be impulsive, 3 waves back, and then we'd be looking to go to the long side. If it just bounced up in 3 waves, then we'll be looking to short this here and then move down from that point there. So there's still a fair way to go. Yes, it does have a bearish bias in terms of the trading levels, because 1472 is retested resistance, so that puts it in bearish mode. And once the 1450 here has been retested as well, the midpoint, then it's also bearish as well. While it's sitting on the 1430 here and above the 1420, it's got a bullish bias to it within this scope. But the 1420 is resistance, then it's bearish. So this move up here does appear to be in 5 waves. That's why I'm also giving it time as well. When we have a look at silver, for instance, if I can find the right chart here, this is a 15-minute chart here. So it's low here. You can see that it's got the wave 1 and 2 here, the nice strong 3rd wave here, and the 4th and the 5th here. So this really needs to be looked at as an A and a B and a C wave coming through to here. We don't want it coming down past the 61.8 retracement level, so it's around the 23.45, 23.40 sort of area. Below that, and it would sort of blow this one out into a bearish picture. And the silver is more bearish than the gold. Of course, that rotates and changes, but generally speaking, at the moment, that's the case. So, yeah, look, if this was going to push to the long side there, and you want to trade long, then you need this number here, the 23.72 this time around, as the support, and then you'd look to add on the 23.80 at that point there as well. So once again, we need to allow this to play out through here. But because of this particular structure here, it does appear to be an impulse wave, where this one appears to be corrective through here. So we just need to allow this to play out a little bit further through here to pick that that thread up through there. Alrighty, let's have a look at FX, because the euro is setting up to become a good long-term short trade. Okay, so the US dollar here is pretty much on track. Look, it's obviously going to have slight problems at the old highs, and also developing support on 83. The 83, as you know, is extremely important to have support, because it's the foundation, the support for the next move up in creating new highs. So, look, that said, everything's pretty much going according to plan. If we look at this on a more of an intraday level, yesterday we were looking at these 5 waves to the upside through here. We're we're in some type of correction here. Obviously, these corrections are tricky little suckers. This can get a bit larger through here as well. Even come back into the 82.72 through here, and we're kind of expecting that in a way too, because we're looking for the euro to push back up in its rally as well. If I can just come into the euro here on the 1 hour through here, so we were looking for the euro down in 5 waves, and we've got that, and then we were looking for wave 2 to come back. And the norm is the 61.8 retracement level, of course, back up through this area through here. But we also know the euro can have very shallow retracements as well. So our first best bet was to look for the wave 4 of 1 lesser degree at the lower end of the spectrum, because when a market does move up, does rally, then you just look to where the most volume is being traded, and then they're your price points where the supply is going to be, obviously. So look, the important thing with this though is that if I can just maybe even get onto a bigger picture here, just to sort of bring it into perspective a little bit. Well, it's still not quite there. Let's find a larger picture here, right? So, look, what we're looking for here, and this is the possibility of a long-term short position coming up through here as well. If we're correct in having this down as wave 1, an A and a B and a C for wave 2 here, then we're looking for wave 3 to come down. In this coming down through here, we don't have a 5-wave structure as yet. What we do have, we have 5 waves in here. We can make that wave 1, and then this can be wave 2 here, which we have done. And then we're looking at this being 5 waves down of the next degree. So basically, if I just come in here, it's a bit important, this one. So we're looking for wave 1, wave 2, and then we're looking here, we were looking for this being wave 1 as well through here, then coming back into wave 2 here, then 3, 4, and 5, to build that way down. In terms of having the 1, the 2 there, the 3, the 4, and the 5, that's sort of what we're looking at. And then we're looking at having the 5-wave structure within wave 3 here of the 1, the 2, the wave 2 here, pulling back. That's what we're sort of looking for here. But there's a couple of things here. First of all, that this move that we've got down here is in 3 waves. So realistically, it could be corrective in terms of an A and a B and a C through here. Okay, so that's one point. Now that point's important because that will keep you from over trading. Okay. Secondly, on the bear side of things as well, is that what we're looking for here is the 130 to become a retested resistance through here, and we can see that it's moved down through here as such, like it's moved down through here. But we want to kind of just see if it can test, higher through here, because the norm would be the 61.8%, which would be back up through here. So we just want to see that locked under there. If for some particular reason it does drop through here, then obviously you'd just short it from this point here, and you'd keep the stop above the 30 at that point there. But otherwise, what we're looking for here, if you had to set limit orders in the market to get this, would be looking at 350 to sell, and then building in a position to the downside through here as such, all the way through here. We basically want to see a test higher here, and then we want to see the 130 as retested resistance once more, so like a second retest there, and then we can take it from that point there. But this is pretty much the first target zone here too, which would be the 128. So it's it's got further to go down than that, but it's just the first the first point that we're looking for here. So hopefully we'll see a retest back up into this area here, and we should be able to work out what that what that pattern's going to be up in that retest zone there. So it's just a matter of just having some time there. So look, basically Once again, if this correction is going to go sideways and stay under here, then this is going to be wave 2 into this area through here. So that means that you need to glean a short positions through here, and certainly under the 129 as resistance as well. And if it stays in group 2 here and does push up through here, just at top here, and then comes down, use the 130, then use the 72 here, then the 50, and it's going to be bumpy into the 129, and then under the 129 you want to be short under that there as well. It should move quite quickly to the downside. That's the other point as well. So under normal circumstances, we would have, you'd put a limit sell in at 120 and 130.50 here at the midpoint, and then keep stops above here. But look, I think this is a time to sort of focus in on this particular market, and let's just allow this time to work out through here. So if we do get a break lower here, then that's the short. Otherwise, we'll be seeing some sort of rally through here while the US dollar pulls back into the 83 here, and maybe even into the 82.72 area here as such before moves up through there. But even if this is sitting on 83.30 here at the moment, so that's the top of subgroup 1. So if new highs are made just above that there, so if we bring that down there, if we get a clean break to the upside through there, then you'll know that we need to be shorting the euro at that point from that break down through here as well. So I'm just giving you some different options about here, because we don't always, and being at the other side of this too, we're in wave 2 here into the third wave of the third wave of this degree, and now we're looking at third wave of this degree as well. So that's when you get the most strongest move. So we just need to be a bit mindful that we may not get the full retracement level here. Alrighty, the Australian dollar is pretty much on track through here. This is the 4-hour count here, and yeah, look, it's what we can expect here is the market's going to be moving through the $1 here. It's below that now at wave 5 of 3, searching for the low there. We should see a wave 4 move back very shortly, which will be the retest of the $1, but it can move back up to this height through here. So we need to be mindful of that, but we also need to be mindful that it may just retest through to here, then come down to the 98, then retest back up there as well. So really we're going through a whole series of waves, 4s and 5s through here as well, coming in lower thing here. So all the trading should have been done in these little areas here, and that's what we're trying to achieve in the euro, the beginnings of the trends here. But this is this is the beginning, this is the middle, and this is the ending structure through here. So wave 4s will get complicated. You don't want to be losing money from there. You need to be holding long-term short from here. So trend traders need to even tighten up and just trade the micro levels between each 1 cent each hold number through here. Alrighty, well that's it. So the euro is probably the best trade on the market, being sort of set up for that, as the rest of the markets are just indices to edge higher, the Australian dollar to edge lower, and we need to get a bit of a grip on what the precious metals and base metals are doing. They're steady at the moment. We just need to watch the development of their internal wave structures, so we can work out what move next will be coming from them. It's not like we're going to miss anything from them anyway, because we don't have a clear impulse wave on them to the downside as yet anyway. So we'll be looking for 5 waves down and 3 waves back up, and that's a long way off yet. So the longer term trade for those, for the precious metals is not there just yet. So alrighty, well that's it. So good morning, good luck, and enjoy the day ahead.